All right, what's up, you guys? We're gonna step back today, and we're really gonna get into like some logic and psychology with trading smart money and really just trading in general. Because yeah, smart money is really a good, not good. I'd say it's a great concept, and it's one of the most rewarding concepts when you really learn it and understand what you're doing, and you back test it and you know what you're looking for. But yeah, it's one of the best strategies out there because it actually is you're playing with the banks and you're playing with the big players of the market, because basically essentially what smart money is identifying where the banks are getting into the market and just playing off of them. That's basically what it is. And with any strategy there is losses, so I can't technically say that smart money is like the end all be all strategy and nothing can beat it, because I know there's also retail traders that's making like good profit with their retail and everything. The problem is like between any strategy is about having a trading plan and knowing exactly what you're looking for and knowing exactly what you're doing. So I can't like technically say smart money is the best strategy, because that's really subjective to how you trade it. Some people don't see the market the same way, and you can't really train somebody. You can, but you can't really train somebody to unsee something that they've already learned. Like me, I can't really go to another strategy because I've already seen smart money and I've seen the possibilities of it. So I can't really unsee it. If I try to go to another strategy, it really like mess up everything that I've learned, and I'll still see smart money compared to another strategy. So that's like one thing we're going to touch on right here is strategies. Don't try to switch from one strategy to another strategy, or this to that, or that to this. So don't try to mix strategies. I know people try to call like Wyckoff a strategy. Wyckoff is not a strategy. Wyckoff is a theory. So you can mix Wyckoff with smart money because really they're going off the same thing, because Wyckoff is just an accumulation of orders in an area, and that's all it is. Because it is a theory, it's not a strategy. So that's why you can mix Wyckoff with smart money, but don't try to trade like, let's say, don't try to like go from like breaking retest or like supplying like let's say not supplying demand, what's it called, support and resistance, and then smart money, and try to like go from smart money, you've learned smart money, and then I want to go back to support and resistance, because now it's going to be really hard for you to unsee that smart money. So instead of just confusing yourself, just stick to one thing and learn it. If you want to learn support and resistance, then stick to support and resistance. If you want to learn whatever it is, stick to that. All right, so whatever is good for you. But that's one thing I want to touch on is first step, don't try to switch from strategy to strategy. Once you find a strategy that you like, stick to it and continue to it. So like I said before, smart money is not the end all be all. Um, Even though it is like a high probable trading strategy, and you get good rewards off of it, good risk to rewards and things like that. It is not the like the that's it, and like you're gonna be successful and like all of that stuff. Even though we're trading with the banks, there's still like manipulations going on in the market. So not every order block or point of interest that you have will, I'd say, be successful, as I say. So they're still in need of a trading plan. So let's expound on that a little bit. So I know if you've had like the perfect setup that you've seen that's worked before, like you have a order block, you have a grab of liquidity, and you're like, damn, this area looks good. I'm gonna set a limit right here. If I'm saying, and you're confident in it because you've seen it multiple times and it's worked multiple times, and then that one day it just boom hits stop loss, and you're like, whoa, what happened? Am I doing something wrong? That's the first step right there. That's where you've messed up right there, and that's why psychology is like an important thing. The first thing you ask yourself is, damn, did I do something wrong? Like, what's going on? Why did this not work? You feel what I'm saying? Instead of asking yourself, why did this, like, instead of asking yourself like, okay, what was the difference between this and the one that I took previously, or like, what is the condition of this market, what is the trend of this market? You feel what I'm saying? Instead of going back and back test what you've traded before and comparing it to this. And simply, sometimes it might be the exact same setup. It's just that smart money didn't want to react off of that. The banks didn't want to react off of that area, or they had a higher point of interest, or they had a lower point of interest that they want to react off. Stuff like that happens. Sometimes you lose just because you lose. You can't predict every move that the banks wants to make. That's one thing you just gotta realize. You can't predict every move. Just because it's an order block, it took liquidity, doesn't mean they have to react off of it. Most likely they will, but it doesn't mean they have to, because they're controlling the markets. So all we're doing is playing behind them. You always have to keep that in mind. We have to react off the market, not predict the market. So just always keep that in mind, and just understand that losses are losses. Like, no matter what you trade, no matter what strategy you're trading, no matter what you're doing, you're going to take losses. And sometimes you think, oh, just one loss, I might take one loss. Nah, you'll go on a string of losses, like when you least expect it, and then you'll be questioning yourself, like, damn, am I doing something wrong? Maybe I should switch strategies. It's not working out for me. And that's how most traders just end up to stop trading, because of the losses. But what you really don't know is, like, that losing journey is what really forms your whole trading strategy. That losing journey is what's really going to form you, and that's going to force you to set up a plan for yourself. It's going to force you to set up trading rules and plans for yourself for you to trade now. So I feel like that's an important aspect of trading that every trader needs to go through, is like that string of losses. Like, even like, let's say like you have a good setup, you have a good understanding of smart money, you've been winning for a while. You've been winning, and now all of a sudden you're losing, but you feel like you're doing the same thing. That's what you need to go through to understand, okay, what exactly am I looking for? You feel what I'm saying? Like, what exactly am I looking for in the market? If I see this, am I going to trade it? If I don't see it, am I going to trade? That's one thing you need to ask yourself, because you don't have to trade every day. If you don't see what you're looking for in the market, there's no reason to trade. Like, so what's the point of staring at a market if you don't see anything that you want to see in it? You're not going to trade it, so you're just going to waste your time just looking at it. So yeah, mostly we're just going to be talking in this video. I mean, I could go over like, no, I don't want to go over that. Hold on. I know I was looking at CAT CHF this morning. I think I was looking at this. This could be a good example right here. Okay, so what if this right here is a break even type of trade? Because yes, we did get a reaction off this area, and then we did break this structure down here. So this would have already been at break, if you can see it. This would have already been at break even. This was the candle I was trying to play off of. Main reason, if you want to go back, main reason I was looking at this, we have a 4-hour point of interest here. This was the main distribution area. This was a redistribution that caused us to go down, and we do have another point of interest here, but this is just a decisional point of interest. So you know how we play off decisional point of interest is we have to wait for the market to show us some type of sign, and the market did. As we were making this structure down here on the 1 hour, we had this little trend going on the 1 hour, and then suddenly after we reacted off of this happened during Asian sessions. There's really no entry in here. I mean, I guess you could have forced an entry inside of there if you really wanted to take it, but I don't like trading Asian sessions, so I wouldn't have taken that. But afterwards you had a pretty good, actually, yes, there was an entry in here, my bad. After this we did break some structure here. If I go on 15-minute, we broke this little leg up here, and there was something you could have taken right here. I think it happened around pre-London. There was something inside of here that you could have taken, and then as soon as overlap opened, you got this spike to the upside to come mitigate whatever was in here, because they wouldn't have used this to come up here for no reason. They had a reason to come up here. So I guess there was some type of order block in here. I wasn't really paying attention to this, but I guess there was something inside of here that you could have taken. I mean, if you really want to go back, you could check this out. This is CAT CHF and see like how you would have played this. But yep, we broke 1 hour structure. So this was a a good area to look at here. And we did get a reaction off of this. Don't get me wrong. Like they did come back here to mitigate something, but is this just because they came and mitigated it, right? Like let's think about that. Just because they came and mitigated this area, do they want to continue down? That's the one thing we have to see. And right here, it looks like they don't want to continue down, to be honest, because if they wanted to continue down, this wouldn't have happened. This wouldn't have happened. So, with that, you see how like I'm really just playing off what the market is showing me. I'm not trying to anticipate what the market is doing. Like, okay, if the market wanted to, like, at first, you know, I expected the market to go down. You feel what I'm saying? It did, but after I seen this happen today at New York Open, and I seen this impulsive move to the upside, it's clear that they don't want to go down. Because if they wanted to continue the market down, even though this is a good momentum trend, because look at how the downside compares to the upside, it looks good. This could possibly still fail and go to the upside, but it's not confirmed until we break this high here, or this whole point of interest in general. So I'll keep looking, but most likely we might continue to the upside. We'll have to see. The only way I'll sell this is if we make a grab a liquidity or something, and then come down here, break this structure again. That's what I'll look at. And like that, I mean, if that happens, it does. If it doesn't happen, it doesn't happen, and we'll just play off whatever happens. That's how you need to look at the market. Play off whatever happens. Just because this order block failed and, you know, whatever, doesn't mean you can't just find another move. That's basically how it goes. And I have plenty of other examples. I'm pretty sure like you've taken losses of failed order blocks, or order blocks that looked very good, and you took a loss off of it. So I don't really need to go on too much. This is just something that I was looking at today. Let's see. What else I want to talk about? Let's see. So yeah, losses. Yeah, just when it comes to losses, you gotta shrug it off. I feel like mentality is the main one thing that people just forget about in trading. Like, it's really like 10% trading and 90% your head, because it all goes on in your head. These candlesticks are here to confuse your head. These moves right here are used to confuse you. All of this, all these candles are used to confuse you. So don't focus on the candles too much. Focus on what's going on in the market. And once you have a set of rules, we're gonna go over that in a minute after, you know, I just finished talking about the losses. Once you figured out okay, so what I meant to say is, once you, let's say you're going to a string of losses, right? As you're losing, don't keep risking the same thing. If you're losing, let's say if you're risking 1% on a trade and you lose that trade, okay, you lost 1%. You lost, let's say you lost another trade, you lost another 1%. After that, after you see that you're beginning a string of losses, put your risk down to like 0.5%. So now it takes 2 trades for you to lose 1% again. If you keep losing, let's say you lose, okay, you lost again, you lost another percent, you lost again, you lost another 1.5%. Right now, if you lost like what, 3.5%, if my math is correct, I don't know, but you get what I'm going with this. And if you keep losing, go down another 0.5%. Now you're at 0.25%, and then stay at 0.25% until you get a win, until you build your confidence back up. Because the more you keep losing, the more your confidence is gonna go down, and then you're gonna start revenge trading. Then you're gonna start emotionally trading, and you're not gonna focus on what you're looking at no more. So keep that in mind. Keep that in mind. But let's get into the trading plan. So what you want to do is, during your string of losses, or during whatever, if you're not losing or if you're winning, it doesn't matter. If you're winning, be ready for losses, because it's gonna happen. Okay. If you're losing, the best advice I can give to you is stop trading for a little bit. Take a week off. Stop. Like, don't. I wouldn't say like don't look at like you can look at the markets. Just don't trade. Just don't trade. Okay. Train yourself to be able to not trade. All right, because you don't have to trade every day or every week. Because sometimes weeks you don't see nothing. Like you feel like you should see something, but that's a good thing that you don't see nothing because you know what you're looking for. So if you're losing, either lower your risk down or don't trade. And in that time period, if you not trading, the most important thing I want you to do is journal your losing trades. Take screenshots of them, and just mark them out and try to compare them to your winning trades. So compare them to the best setups that you like and the best setups that work for you, and compare them and form a trading plan off of that. So let me pull up this PDF that I have here. Boom. This is a PDF that I have here that I kind of made. And it's just going off. This is structure. This is POIs. These are POI confirmation entries based on lower time frame, like 1 minute, 5 minute, 1 minute. Type 1 accumulation, type 2, and just a couple other things. And this is just a visual view so I can see it. And then I have like Wyckoff. I have my certain rules for my Wyckoff accumulations of what I want to see for Wyckoff for me in order to take it. And then I have a top-down analysis right here that I go based off of. These are just rules for me. These are basic. I try to keep it basic. Try to keep your rules basic. Don't try to go too in depth, or like just don't try to make it too complicated. Keep everything simple. When you're trading, just keep it simple. I have 2 of these for some reason. When you're trading, keep it simple. Like, don't try to overcomplicate it, or don't try to, you feel me, just like draw too much. Just keep it simple. You know what you're looking for, look for that. If you don't see what you're looking for, don't trade. Let's keep it that simple. But yeah, the main point of this video, if I was just talking a lot, my bad. But really, I just wanted to just get this out because psychology is one thing that's really underrated. One thing about this video is psychology, bro. Another thing that I would want to say is, aside from trading, try to find a hobby. Try to find something to do. Go read, bro. Go outside. Go do something. Don't focus on the charts 24/7. That's another important thing. We're gonna talk about that a little bit more. What you need to do is, in your trading plan, right? As you're setting up your trading plan, what time is your winning trades most likely winning? Like, what time is your best time to trade? Figure that out for yourself. Don't try to go off somebody else or what somebody had told you the best time to trade. Figure that out for yourself, what time. So for that reason, I'm not going to tell you what time I trade because I want you to figure that out for yourself. Figure out the time what you trade. Figure out the time that you want to look at the market. Okay, so find that time out and find that time period. And if you're not in that time period, don't look at the markets. Okay, go outside, go do something, go or whatever. I'll tell you one thing is, I only trade for like, let's say like I'd say like 3 to 4 hours that I'm actually looking at the market. Not 3 to 4, I'd say like 3 hours max that I'm actually looking at the market. And like out of that time, I'll like look at the market, but I'm not really to get into the market. You feel what I'm saying? And after that, I'm really not looking at the market until the next day, to be honest. So find that out for yourself, because the thing about trading is you want to be free, right? The point with trading is you want to be able to not work, right? So why are you making trading feel like a job? If you're on the charts 24/7, doesn't that feel like a job to you? If you're pulling 9-hour shifts on the chart, doesn't that feel like a job to you? So why make it feel like a job? Make it feel like a hobby. Make trading feel like a hobby. Okay, don't make it feel like a job or something that you have to do, something like that. Go on it when you want to. All right? So that's one thing, and that really goes on the topic of psychology as well. So that's just one thing I wanted to expound on. But yeah, that's really what I want to talk about, is set up a trading plan for yourself. What are your rules? What are you looking for? What do you need to see to enter a trade? Where do you want to look for a trade? And just simple things like that. But most important thing is, just keep everything simple. And yeah, that's really all I could say right now. Just keep everything simple. and expect losses too. Simple as that, bro. But yeah, that's really all I have for you guys today.